Hi, I'm David Schenk. I'm an attorney and an enrolled agent, enrolled to practice before the IRS, and I talk about tax issues, estate planning, and asset protection. Today we're going to talk about the IRS 10-year statute of limitations. So what is the 10-year statute of limitations? Simply put, it's the amount of time the IRS has to collect taxes after they have been assessed. So how long can the IRS go after you for back taxes? The IRS doesn't have forever to collect taxes that you owe. Generally, there's a 10-year limit or statute of limitations on IRS collections. And this means that once your tax debt becomes more than 10 years old, it's no longer collectible, and the IRS can't pursue any collections activities on that debt. So what does that mean exactly? Not only is the debt no longer collectible, but any existing collections actions that are already in place have to be stopped. So if the IRS is garnishing your wages or has a lien on your property, they have to stop the garnishment and lift the lien as soon as your debt passes the 10-year statute of limitations. But how long is 10 years? Seems like a silly question. The first thing we want to ask is, when does the 10 years start? It's not from the date that you file your taxes, which is a date you might imagine it is. It starts from the date that the tax was assessed. So imagine that you file a return on April 15th and you're unable to pay the balance due at the time. The IRS is going to process your return and they're going to issue you a bill. The date of that bill is the assessment date, and that's when the 10 years starts to run. It's usually just a few weeks after you file the return, but sometimes it can be longer, and you can find out the exact assessment date from the IRS by getting a tax transcript, which will include the assessment date on it. But of course, each year has its own 10-year statute of limitations. So, for example, if you couldn't pay in 2009 when you filed your 2008 taxes, and then you also couldn't pay in 2010 when you filed your 2009 taxes, the taxes that were due on the return you filed in 2009 are going to pass their statute of limitations in 2019. And later, the taxes on the return that you filed in 2010 will pass their statute of limitation in 2020. And so when we talk about having to stop collections activities, they really only have to stop collection activities when all of your past due taxes are past their 10-year statute of limitations. Also, 10 years isn't always 10 years. Sometimes the 10-year statute of limitations can last longer than 10 years. Why is that? Well, the statute of limitations period is extended for any time during the original 10-year period when the IRS is legally unable to pursue collections activities. So, for example, if you filed for bankruptcy, while the bankruptcy case is under consideration in the bankruptcy court, the IRS, just like all other creditors, is barred from collections activities. So that time is added to the end of the original 10-year statute of limitations. Obviously, this assumes that all or some of your taxes are not going to be discharged in that bankruptcy case. There are other activities as well that suspend the 10-year statute of limitations, and these include the time the IRS is considering an offer in compromise, or the time they're considering an installment agreement. Because they're going to stop collections activities during those times get added to the end of the 10-year statute of limitations. Another thing to keep in mind is if you leave the country for an extended period of time, then the 10-year statute of limitations is also tolled or suspended while you're out of the country and until you get back in the United States. So as you can see, it can take a little bit of to figure out exactly when that 10-year statute of limitations is going to pass. That's not all. The most important thing, the number one thing that is going to make the statute of limitations longer than 10 years is if you don't file a return. If you never file a return, then the 10 years never starts to run, and the IRS has forever to pursue the tax debt. It's one of the reasons that filing return is so important, even, maybe especially, if you don't have the money to pay the tax due. You still want to file to at least start the statute of limitations, as well as other important time limits to start them running. Also, sometimes the length of the statute of limitations is going to be your call. You can voluntarily extend the statute of limitations by agreement with the IRS. And this is something that we see occasionally where if the debt is nearing the end of the legal collections period, nearing the end of the statute of limitations, the IRS may accept an attractive installment agreement offer. And when I say attractive installment agreement offer, I'm talking about an installment agreement where you may pay less than 100% of the tax and penalties and interest that's due. It's one of the few occasions where they may accept less than 100% in an installment agreement. But they often will require you to agree to extend the statute of limitations. It's not something that you have to do. You can always say no. And of course, each situation is different. But be aware that if you're having that conversation with the IRS and they ask you to extend and you say no, that may spur them to seize some of your assets in order that they can collect something before the end of that statute of limitations. Disclaimer: this video and any accompanying text is for informational purposes only. The information provided does not and is not intended to constitute legal advice. No attorney-client or similar relationship is formed. If you require legal advice, please contact an attorney or other legal professional. This video covers a complex legal area in just a few minutes, and of necessity leaves out much of the detail. Don't make decisions based only on this video.